Welcome everybody, welcome to another episode of our Facebook Live event. This month we have a very special program for you because we have invited a special guest, an analyst from fsn1.com, Tan Jin. Nice to see you again, Jin.
Thanks for having me, Stanley.
Yeah, so we're going to talk a little bit about something very interesting this time around, which is a sector that Jin has found to be quite extremely undervalued right now, the Chinese banking sector. And he's going to explain to us why is there opportunity for investors right now. So before that, maybe you give us a brief background on what is the Chinese banking sector as a whole like.
Sure, Stanley. So China's banking sector is pretty similar as banking sectors in most countries. So they perform functions such as the acceptance of deposits, issuing loans, and clearing foreign exchange matters also.
Okay. But I understand that the market is pretty fragmented, right? Unlike Singapore, we only have the 3 local banks. But who are the big players in the Chinese banking sector?
So in a nutshell, China's banking sector is actually broken up into a few categories. So on one hand, you have your state-owned banks, which are the largest banks in China. And apart from that, you also have your city commercial banks and also rural banks. And lastly, you have foreign banks in China also.
Okay. And for this particular topic that you want to talk about, is actually focused on the 4 largest banks in China.
Yeah, correct.
And who are they? And can you share a little bit about them?
Sure. So there are 4 large banks in China. So collectively, they are known as the big 4 banks in China. So they are ICBC, which stands for the Industrial and Commercial Bank.
Okay.
And we have China Construction Bank,
right.
Agricultural Bank of China, and last but not least, you have your Bank of China.
Okay.
So these are the 4 largest banks in China.
4 largest banks in China right now. And how can investor, actually where are they listed and how can investor get exposure to them?
So for these 4 banks, they're actually listed both on both in mainland China as well as in Hong Kong. So but for the context of most foreign investors, I think the easiest way to get exposure to them would be to buy their H shares on the Hong Kong exchange.
On the Hong Kong exchange. But is there any key difference between if I buy on the China A shares or the Hong Kong H shares?
Sure. So obviously one of the key differences would be if you buy H shares, the shares are denominated in Hong Kong dollar. And if you buy in the onshore market, it's denominated in renminbi.
Yeah. Right. So even my dividend is in the currency denominated.
Yes.
Oh, okay. That's interesting. And why do you think there is opportunity right now in the banks?
Well, to answer that question, we have to look at what happened last year. So what happened last year was that the entire Chinese equity market had suffered a massive sell-off with share prices of the big 4 banks actually declining by more than 30%.
Okay.
Yeah. So the last time we saw that was somewhere during 2015 after the A-share market crashed.
Right. Okay.
So back in 2018, so we saw that the valuations were actually trading at pretty close to crisis level valuation. So that's why we felt that there was an opportunity in that space.
Okay. But what, in your opinion, what causes the sell-off last year for the Chinese banks?
Yeah. So for the Chinese banks, they were affected by a variety of factors. So one of which is the slowing economic growth. So China has been reporting slowing economic growth of about I think 6.3% for this year, and that has certainly had an impact on its equity markets.
Right.
So apart from that, tensions from the US-China trade war also played a part in the sell-off. And last but not least would be the government's domestic deleveraging campaign.
Oh, okay. Maybe can you explain a little bit about some of these points, like trade war? People talking about trade war. Yes, it affects trade, but why would it affect the banking sector? How would it affect the banking sector?
So in times of stress, companies that perhaps are more export orientated might come under pressure, and they might not be able to service their loans, which would increase the number of defaults.
Yeah. Right. Okay. So increases the risk that some of these companies that taken loans from the banks might default.
Yes. Exactly.
And when you talk about the deleveraging program in China, what exactly is happening there? What is deleveraging?
So the deleveraging program in China is action instituted by the government of China, which aims to reduce the ballooning levels of risk and leverage within its economy caused by excessive years of borrowing.
Okay, all right. So they are just trying to ask some of these banks to lower down the risk profile of all these loans.
Yeah, not just banks, but most companies in China as well.
Okay. And what other catalysts do you see, to if investors is interested to invest in this sector right now, what is the catalyst that we have to wait for?
So despite the deleveraging campaign, we think that the NPL ratios, which stands for non-performing loan ratios of the banks, are actually pretty stable for the big four banks in particular, and it's definitely one of the bright spots in this space.
Okay. So for those of you who might not be familiar, NPL basically just stands for non-performing loans. It's just a measure, for banks to see how much percent of their loans is actually in crisis or in default.
Correct. It's a measure of bad debts.
Right. So the lower the number, the better.
Correct. Yeah.
Okay. Does this banks pay a dividend for us also as investors?
Yeah. So for the big four banks, they actually pay a dividend of roughly 5+%, which is we think is pretty decent compared to most other fixed income instruments you find in the market. So apart from having low valuations, and they also have attractive dividend yield. So we think that it's actually quite a good idea or a good play for investors who are more dividend and value orientated.
Right. Okay. But of course, I'm sure in Singapore right now, we have a few cases where even there's a high dividend or high interest for investors, they have not been a very positive outcome. So in your opinion, do you think that this dividend is sustainable for investors?
Yeah, so actually we think that the dividend of about 5-6% is pretty sustainable for a few reasons. So one of it would be the big four banks, they currently have a low dividend payout ratio of about 30%.
Right.
So what a low dividend payout ratio means that whatever the bank takes in as earnings, it only pays out a small sum as dividends. So you can see that even in times of stress, in times of crisis, they still have the potential to continue paying out the dividends because they have a low dividend payout ratio to start with.
Okay. So there might even be some chance that they could potentially increase their dividend if the business are doing better in the future.
Definitely, there's a chance of that.
Wow. Okay. But if there's so much positive in this sector, why do you think they are still continuously trading quite cheaply compared to some of its global peers?
So I think in general, Chinese companies, they tend to trade at a discount to their Western counterparts. I think part of it is because of the negative stigma investors have about China.
Oh, okay.
Yeah.
Okay. So you mean they have been trading quite cheaply to, say, the US bank for quite some time?
Correct. So I think the average price to book ratios for the big four banks, it's hovering around 0.8. Compared to banks from developed countries which are trading at above book value, about 1.1, 1.3.
Yep. Yeah, and even it seems on valuation point they are even cheaper than our domestic banks as well.
Yeah, they are.
Okay. But what could be the risk? People you say there's a stigma to Chinese banks and Chinese businesses. Sometimes this stigma is based on some version of truth as well, right? So what is the risk we should be considering?
So possible risk could be if China and US doesn't come to a trade deal, and it might continue to put stress on the economy. And also if the deleveraging campaign, if the government steps up its deleveraging campaign too aggressively, it might increase a lot of bad loans or make certain companies unable to obtain financing.
Right.
Yeah. Which could then put stress on the banking sector.
Right. Okay. But from your research, I assume that so far you have not seen that level of crisis in your research, right?
I think now we think that the Chinese government is very aware of the amount of leverage in its economy, and it's more of a fine-tuning policy to balance between economic growth and deleveraging to ensure that China doesn't go into a hard landing like it did in 2015.
Right.
Yeah. So I think in a nutshell, we think that China is on a much stronger footing than before.
Okay, that's definitely good to know. and maybe as a summary, how do you think these banks would continue to grow in the future? How do we see them as an investment?
Well, in summary, we think that given the current low valuations and the attractive dividend yields of the big four banks, we think that the outlook still remains favorable. So coupled with things like stronger loan growth and increasing net interest margins in China's market, we think that the banking sector, and in particular the big four banks, is ripe for a recovery.
Okay. Yeah, you talk a little bit about, net interest margin increasing. Can you explain a little bit what is net interest margin?
So net interest margins is actually a metric that it's very important for banks because it measures the amount of interest income versus interest expense.
Okay.
Yeah. So obviously, the higher your net interest margins, then it'll be better for the banks. Yeah.
Right. So in a way, because banks are kind of buying and selling money, right? So the deposit rate that they give us, maybe at 3%, they have to give out the loan at 5%. So their net interest margin, the differences is actually 2%.
Yeah, correct.
Is that a good way to look at it?
Yeah, exactly what you said. So for the banks, money comes in through deposits from consumers like us. So what they do with the money is they'll take that money and they actually loan it out to various parts of the economy at a much higher rate than what they pay out as interest for consumers.
Right. Yeah. Okay. And so for investors, if they are also getting interested in this sector, how do you think is the best way for them to get exposure to this sector?
So obviously, a very direct way would be to buy shares in the individual banks through Hong Kong Exchange.
Okay.
Yeah. But the downside of that is, let's say we are interested in the big four here, so you have to buy all four, and there's a lot of things to monitor. But we have an easier solution, which is you can get exposure to these banks through an ETF, and the ETF is called the BMO Hong Kong Banks ETF, which is listed on the Hong Kong Exchange as well.
Okay, so it's called BMO Hong Kong ETF.
Yeah.
Hong Kong Banks ETF. Okay. For some of us who might not be very familiar with what ETF is, exchange traded funds, can you explain a little bit what exactly is exchange traded funds?
So ETFs are actually a cross between a stock and a fund. So for stocks, they trade on an exchange. They have price discovery every second. And on the other hand, funds are an instrument where when you buy into a fund and you get diversified exposure to a basket of stocks. So ETFs are actually a combination of that. So buying an ETF you would be buying it on an exchange, similar to stocks, and of course you also will get diversified exposure to a basket of underlying stocks, whatever the ETF is tracking.
Right. Okay. So it's a good way for us to diversify, to have a basket of stocks just from an ETF.
Yeah, definitely. It's a good way for retail investors who don't want to hold too many individual stocks and diversify their risk through just a single instrument.
Right. Okay. So for some of our audience, if we still want to know more about ETF, how can we get more information about that?
So actually at FSM1, we have this upcoming event called the ETF Festival, which is happening on the 4th of May at Capital Piazza. Registration is free.
Right. Okay. And what can we expect when our audience go to the festival?
Yeah. So at this event, you can expect a lineup of presentations and also interact with industry professionals from the likes of Nikko Asset Management at various booths.
Right. Okay. So some of these fund managers will be there directly to explain to us and giving some speech as well on how ETF really works and how we can gain exposure to them, right?
Yeah, correct. We have a lineup of exciting presentations waiting for you all about ETFs. Yeah.
Cool. I understand it's a full day event. So if you're free down on the 4th of May in Singapore, to check it out. We'll share the link with you down on the show notes. So I just want to thank Terjun again for his time and explaining to us these wonderful ideas on Chinese banking sector. Thank you so much, Terjun.
You're welcome, Stanley. Happy to be here.
Yeah.